It's time for Lykken on Lending.
Welcome, everybody. Good to have you with us.
Welcome to Lykken on Lending, a weekly mortgage market update providing up-to-the-minute information on interest rates, loan programs, and hot industry news, all related to the mortgage industry. Brought to you by Transformational Mortgage Solutions. To participate in today's program, our guest call-in line is 646-716-4972. And now here's your host of Lykken on Lending, David Lykken.
Let's begin.
Welcome, everybody. It's Monday, May 27th, Memorial Day. I want to say a special thank you to all of our veterans that are serving across the world, as well as the veterans' families. And, of course, a special thank you goes out to those families that have paid the ultimate sacrifice. Your loved ones did not come home, and our heart goes out to you. I mean, I was looking over Facebook, and there's some wonderful pictures and images out there. The one that just grabbed me was a young wife of a deceased serviceman, and she's laying on a blanket in front of her husband's tombstone with their baby in a carrier, like an infant carrier, and there's flowers all around. There's a picture of him, and her arm is up on her baby, and her face is buried, and you can just feel the emotion as she's sitting there honoring her husband and missing him tremendously. And there's so many pictures across Facebook and all across the social media today honoring our veterans. And I want to say a special thank you to each one of you that are serving or have served and unfortunately did not come home. We miss you. We're grateful for your service. I was doing some research on when Memorial Day started. It started in April 1885, and it started out as Decoration Day, and it immediately followed the aftermath of the U.S. Civil War. It was a tradition initiated by former slaves in Charleston, South Carolina, honoring those that had paid the ultimate price for their freedom. There was a large mass grave where over 250 Union soldiers had been buried. They exhumed them. They dug them, their bodies up and gave each of them a proper burial. And you look at this kind of giving back is just so unusual. That is a grisly project and a task, but they did that. And, you know, when you look at our freedoms that we enjoy here in America, it comes with pain. Unfortunately, it comes with death, and we got to go back and honor them. Now, you know, freedoms comes with a price, and it's a big price. And on those that have paid the ultimate price, we say thank you, and this day is to honor you that are alive and honor those that are fallen. Thank you so much. This week's podcast is going to be a bit shorter than other normal podcasts because of the holiday. Each of our regular guests, Alice, Andy, Alan, and Joe, are, of course, celebrating with their families. So happy Memorial Day, and thank you to each of them for their contributions to this podcast. And I want to say a special thank you to our sponsors, the Mortgage Bankers Association of America. Also, Black Knight. In today's competitive market, it is critical for lenders to deliver decision quality business intelligence to the right employees at the right time. And to answer this demand for information and having the right information at the right time, Black Knight has developed the Actionable Intelligence Platform to deliver data that drives growth for your businesses and reduce costs. To learn more about this, you can go to blackknightinc.com. Check it out. Also, Open Mortgage, a reverse mortgage lender, one of the largest buyers, and they just picked up another company, LiveWell. Scott Gordon and company just picked up a number of the people, or in the process of picking up a number of people from LiveWell. So congratulations to the LiveWell folks for finding a great home. Open Mortgage is the home of some of the top LOs in the country. Also, Finastra. Finastra's Fusion Mortgage Bot solution automatically addresses compliance issues and enhanced borrower satisfaction. It also helps you increase your production and does so in a way that allows you to capture greater market share. And we have our newest sponsor. I had the privilege of meeting them in New York at the Secondary Conference, and it is ResX, which is United Bank with their headquarters in Connecticut. Very excited to have them join us, and they have a warehouse lending division. I met with Ken Jones and Steve and the two that were at the conference, and Jim Harrison was one of the guys that was been a listener of ours for some time, so he's the one that helped get us exposed to United Bank, and we're grateful to have ResX as our newest sponsor. Check out their warehouse lending programs. We're also pleased to be a part of Lenders One and the Mortgage Collaborative. Both are mortgage co-ops creating competitive advantages for both lenders and vendor members. Velma, an efficient mortgage marketing platform, email platform to getting the word out. I was talking to Brent Emler. It's finding the right vendors to have the right relationships is as important as anything to keep you on top of what's going on. You want to get to know Brent Emler at Velma. He does a great job of staying top of and what's happening in the marketplace. Having a conversation with him on Saturday, a texting conversation, and it's very amazing how he stays on top of some of the latest developments. And that's significant, especially when you get into the Hot Topic segment later in the podcast. Also, Knowledge Coop providing easy, fun training for mortgage lenders, and Vidyard, an online video platform that allows you to communicate internally with your LOs and your other employees, as well as externally with borrowers, and doing so on a video platform where you can communicate more successfully that which is needed to be known by your borrowers so that they can close in time, get you the documentation they needed. And also, I want to say a special thank you to our regulars, Alice, Andy, Joe, and Alan, for their contributions to this podcast. Let's get over to Rob Van Raphorst of the MBA for this week's MBA Mortgage Minute.
Hi, I'm Rob Van Raphorst. Welcome to the Mortgage Minute and the latest news from the Mortgage Bankers Association. Last week, the House Appropriations Subcommittee on Transportation and Housing and Urban Development and related agencies marked up a spending bill that would provide HUD $50.1 billion for fiscal year 2020. The bill provides $300 million for HUD's Cybersecurity and Information Technology Fund, and importantly, also includes an MBA request of $20 million for FHA's single-family IT infrastructure. Also last week, Senators Kristen Sinema and Tom Tillis began the process to request unanimous consent to pass a Senate companion measure to the Protect Affordable Mortgages for Veterans Act of 2019. The bipartisan bill would correct a legislative drafting error that prevented VA-guaranteed orphan loans from being eligible for Ginnie Mae pooling. And finally, last week, the Senate passed a $19.1 billion disaster aid package. Included in the bill is a clean extension of the National Flood Insurance Program until September 30th, 2019. The bill now heads to the House for consideration. That's it for this week. Thanks for joining me.
Yeah, good job. That was fun listening to Brian Montgomery at the conference, and Brian gave an update. And dear Lord God, we need to get FHA and HUD some new computer equipment, some new technology. It's really, really bad. Ginnie Mae is working on updating their systems. That's good. But HUD, oh, man, they really need it, and they've been finally given the appropriation. The $20 million is just a down payment, probably what's needed. So anyway, Rob, thank you so much for your segment. Appreciate it. It was great seeing Rob and all the folks at MBA there at the conference. You know, one of the things I was doing at the conference is I hand out business cards. Well, I was handing out my digital business card. You hear me talking about it on a regular basis. But it works, folks. It is amazing, and I'm getting more and more people listening to me and trying it out. And I want to give Josh O'Leary of Fairway, who's an LO in Olympia, Washington. He contacted me recently. He said he's a regular listener of our podcast. Josh, we're forever grateful for that. Love to hear from our listeners. And he was reaching out to learn more about the digital business card. And he's in the process of trying to get this introduced at Fairway. At least he wants to use it. He gets it. Start seeing the power of this. And over this weekend, I have spent some time. I've got some more conferences coming up. And I'm making specific business cards for specific products and consulting services and coaching services that we offer. And I was making up specific business cards that I hand out for specific things. So if you're an LO, I was talking to Josh about this, if you're an LO and you're working a new open house, for example, and you have some special financing you would like to offer borrowers for this open house, or a VA program, or an FHA program, if you have some special financing programs, or if you just want to talk about all your programs, you can put up together one business card, or you can create many. I know people that are using this business card to create special digital business cards just for an open house for a particular lender. It gives them something of a unique value proposition. So when they were able to, in one particular case, get in with a builder because they were offering this digital business card. Be sure to go to our website. It says digital business card at the top, right at the top menu bar. Go all the way over there to the digital business card. When you click on that, you're going to see my business card pop up there. This is one of many I use. This is my general one. You can scroll up and down literally inside the card. You can watch some of the different videos. This is a concept. The reason I put that up there is so that you have a concept that you can use for a way you could create your business cards. So if you have any questions about how to do this, give me a call or send me an email like Josh did. Love to hear from you. You can send it to david@tms-advisors.com, and I'd be happy to help you out. Again, that's david@tms-advisors.com. Check it out. Anyway, let's get over to Les Parker. So let's hear what his macro view of the markets is this week.
Loan Logic sponsors TMS Soundbites. Say what you want to say and let the yields fall down. Honestly, we want to see you be brave. Is it high debt feeding the Treasury bull markets? Yes. Are the bulls finding comfort from rising tariffs, constraining growth, and shaking the confidence of global equity investors? Yes. Is global sluggishness pushing oil, various metals, and agricultural prices down? Yes. Are emerging markets faltering? Yes. Does the strengthening dollar declare the U.S. economy a winner? You know the answer. Yes. The 10-year note yield can be amazing. Maybe there's a way out of the cage where it lives between 240 and 310. It can start speaking up. We want to see you be brave. These views are my own. Go to tmspotlight.com to subscribe to my daily newsletter.
Yeah, good job, Les. Gary Cantrobone is the guy that's the engineer working in the background to make that all come together. Congratulations on a good job, guys. One of the things I heard at the conference, I want to follow on to what Les was saying. One of the speakers talked about the economy. He actually was talking about, I will be quoting him later on, one of the opening speaker giving an update on the markets was saying how interest rates, there's downward pressure on interest rates. And what's not going to allow interest rates to go higher is what's going on in Europe. But you look at the central bankers of Europe, and what Les was just talking about, the emerging markets, they cannot afford higher interest rates. So there's actually more of a downward pressure on interest rates. That's causing a lot of economists to revise what they're saying and their projections, as well as you look at what the Fed and how the Fed has changed what they're talking about. It's really interesting to see where interest rates could be. Folks, could we be back at a refinance boom? Well, it's possible. I think that a lot of people that did refinance have already refinanced, so I encourage you to stay focused on the purchase market, but there are going to be an increasing number of refinance options out there. Let's run over to Scott Gordon and get an update on the science of sales.
Scott Gordon here with a bit of sales science. Last time we examined the first element of a story, a relatable hero. Today I want to examine the next essential element every story needs, a relevant challenge. The challenge is the obstacle or opportunity your hero faces. For example, a company, one of your competitors perhaps, could be the obstacle. A particular situation could be the challenge. These are gold mines for scenario-based stories. The economy, another gold mine for stories for millennials and seniors alike, robbed of their ability to purchase a new home if it were not for you. Please note your challenge does not always have to be negative. An opportunity, for example, could be the challenge to which your hero rises. Without a challenge or obstacle, your stories are boring and useless. Let's take a look at a series of escalated challenges. Sally goes to the store. Who cares? To buy some groceries. Still don't care. For her 5-year-old daughter. Care a little. Who is sick and hasn't eaten in days because her home was robbed. Their food and emergency money were taken, and her paycheck from her second job will not be deposited for another 3 days. Okay, now I care. It's up to you to understand the purpose of the story and scale the relevant challenge with what your relatable hero is capable of, as well as serving the overall message of your story. Challenges face both you and your borrowers on a daily basis. Make note of them, harness them, and make them your own to turn yourself into a story-selling machine. Remember, crafting effective stories is a science. There are formulas to follow that will yield measurable and proven results. It's not magic, it's the science of sales.
The science of sales, that's so true. How do you tell your story? I think sometimes we struggle in telling a story, but I believe this. I consult, and especially the coaching that I do, I help people get their story out. When you listen to them, they always say, I don't have any story, I don't have anything to say. And then you start drawing into it. And one of the places where I would encourage you to consider is, what is your purpose? In other words, what is your why? Simon Sinek has a wonderful video. Go to TED Talks, or you can just Google Simon Sinek. It starts with why. The video specifically I'd encourage you to listen to is Why Great Leaders, or How Great Leaders Inspire. And then that video, it's an old one. It's got gazillions of downloads. I mean, it's one of the most downloaded podcasts. And it really gets down to understanding your why. And when you can identify that and communicate that, it can have a transformative impact on your business and your relationships all the way around. And I have a why, and you should have yours. And when you do, and it's authentic, it comes from your core, it will come out in such a way that is so powerful and effective, you'd just be amazed at how it can get people to listen to you and draw you into it. I was talking to a friend of mine, Elliot Lewis, this morning, and he met with a realtor. And this realtor came in. He's a top producing realtor. And just how Elliot started telling this guy a story, started challenging him, totally turned the conversation where the realtor was, kind of smugly looking at him like, so you're just another mortgage lender. What can you do for me? And Elliot is so smart. How he engaged this guy was just perfect. And he started asking questions. That's that Socratic process of asking questions. Before he was done, within a short period of time, the table had turned. And now this guy is wanting to pursue Elliot and a relationship. And it really comes from effectively telling your story. Good job, Scott. Appreciate that segment. It's excellent. Good stuff. Go back and listen to all of them. You can go to our website, and you can go to advertisers. If you go to the advertisers, go to Open Mortgage. You'll listen to each one of the segments that we have there. The Science of Sales, they're all up there on the website. You can listen to them one after another. So there's 12 of them up there right now. Scott's recording some more. Check it out under the Advertiser tab. The Science of Sales, part 1 through 12. Grab them and listen to them. You won't be glad you did. And then if you're looking for a new home, check out Scott Gordon's company. It's a great place to work. One of the things I want to do is take a moment and talk about how this training works. What Alice does in her normal segment is talk about the things going on in the industry and help you stay up on it. But how do you communicate that internally? That can be done numerous ways. You can hold meetings, or you can set up a system by which you train and transfer that knowledge. I don't know about you, but pulling everyone into a meeting isn't the most effective way. We've learned because of this podcast that if you have a mechanism of distributing this information and doing so in a fun, easy way to transfer that information, and if you do it by video, that is so powerful. And one partner that we have that we consider you having is Knowledge Coop. So with that, let's run over to Nathan of Knowledge Coop and talk about their system and how you can communicate effectively within your company. So Nathan Nottingham, what you got for us, friend?
Hey, Nathan here from the Knowledge Coop. Are you a teacher or coach either professionally or aspirationally? Then let me share these words from Ben Franklin as inspiration. Tell me and I forget, teach me and I may remember, but involve me and I learn. Benjamin Franklin's famous quote has since been proven by science and educators, and they now call it experiential learning, and it's sage advice for anyone in the mortgage industry. So do you have some training to do? Then check out the Knowledge Coop for fun and easy, video-based training for mortgage professionals out there, and it's all powered by a smart digital platform.
Yeah, check them out at knowledgecoop.com, knowledgecoop.com. Check it out. I think it's really important that we can figure out ways to communicate. And one of our other advertisers we talk about at the beginning is Vidyard. We're using them a lot when we go consulting to clients. We're encouraging our clients to start communicating by video. For example, if you have an underwriter that is wanting to deliver a message out to a loan officer about an approval, and there's aspects about that approval that it's important that they understand. There's nuances about it, whether it be documentation that needs to be obtained or something that is going on in the underwriter's head. If that underwriter can take just a moment to do a video, it's an image of them as well as the audio, but it's showing on the underwriting screen, whatever their LOS system or whatever underwriting system you're using, you literally walk them through the issues. And you can literally show them those issues inside of the LOS that your underwriter's looking at. It's the knowledge transfer and how we transfer knowledge is where so many of us have messed up. And I think there's tools out there that you can use, and I encourage you to check it out. So check out knowledgecube.com as well as check out Vidyard. Okay, so let's talk about what happened in New York City last week at the MBA National Secondary Marketing Conference. Very interesting presentations. Now, again, I keep telling on these broadcasts about why you need to go to these conferences. There's so many good reasons, but there's the networking, and yes, there's all the open houses, and it's fun to see everyone. Sometimes it seems like more like a class reunion. But the MBA does a great job inviting speakers to come and present there. And the first speaker of the general opening session was really interesting. Now, I'm going to get into that in just a minute, but the 4 sessions I intended was an opening session, a view on the economy. The second one had to do with the Q&A that we had with that presenter. Talk about that again in a minute. Then also the general session is an update from FHFA Director Mark Calabria. And then we had a general session about government lending. We talked about with FHA, we talked about VA, Ginnie Mae, all the updates. So we'll talk about that in a minute. But I want to start off by talking about the general opening session Monday morning, May 20th. It was the first session. And the speaker there was Dr. Mohammed Eliran. I may not be pronouncing that correctly, so if you listen to this, Dr. Mohammed Eliran, my apologies. But what he talked about there was about things that you cannot anticipate. One of the quotes he said that I thought was so fascinating is, even the experts of this world, I mean, that's some really smart people, are having an enormous difficulty getting their arms wrapped around of what lies ahead. He talked about interest rates actually going down. There's more of a downward pressure on interest rates because of what is going on in Europe and the emerging markets. Folks, the European central bankers cannot afford higher interest rates, nor can emerging markets. And it's really important that we keep Europe healthy, as healthy as it can be with all the dysfunction they have going on over there, but especially the emerging markets. We do not want to see countries failing. That brings a lot of volatility to the marketplace. You know, while bad news does the mortgage industry well, interest rates have a tendency to do better in a volatile, insecure world out there. The bad news is good for mortgage rates. But we've been hearing Trump asking the Feds to drop interest rates 0.5 point. And they've been talking about raising interest rates, or at least holding steady. Well, it seemed like there was some reason they started talking, well, maybe we can drop interest rates. And Dr. Mohammed talked about that in his presentation. And he said no more did the Feds sound like they just might consider that. Then Trump doubled down by saying, no, they actually need to drop the Fed fund rate by a full point. So it looks like interest rates are at least going to remain the same, but most likely falling. Does that mean we're going to see another refinance boom? Well, regardless of that happens or not, you should remain focused on the purchase business, because as millennials enter the housing market, and we're going to talk about how they're doing it different than any other demographic group has done in the history of man, they're going about it differently because of the advent of the computer, the advent of the internet, the mobile devices. Everything's gone mobile. We've watched how quick it has brought that to our attention in a big way. But what disruption lies ahead? So if Dr. Mohammed is correct that the experts cannot begin to get their arms wrapped around what lies ahead, we need to start looking at some indicators. So let's talk about some areas of disruption that are hitting my radar screen or appearing on my radar screen that I want to share with you. Now, I'm a consultant that works with clients across the country. I have been, our last mortgage company back in 1995 through 2000, which I was involved with, was one of the largest consumer direct lenders. We did it through direct mail. That's how we connected with the consumer. So I pay close attention to the consumer direct markets. I think it's a way to go. I think calling on realtors, I would like to say is never going to change, but there's some things happening in the realtor world I'll talk about in just a minute that I think could change that. So this individual, what's a client of mine, buys leads that are 90 days or older. In other words, leads that have been passed over for whatever reason. Now, I don't know if you know this, listeners, but consumer direct model where you buy leads, only 15% of the leads get acted upon. Either their application was done, that usually runs 3 to 5%, and the rest of them, there was a determination to hold off, wait. But 85% of the leads are not touched or not called on or for some reason were passed over. I think it is because if it's not easy, it's not low-hanging, they throw the leads away. Well, I have a client that buys those old leads and has had the challenge of calling them. And if you're calling a lead that's 180 days old, you can imagine what you're getting, a lot of rejection. So my client, again, we're talking about disruption that could be coming into the marketplace. So my client had a loan officer that was doing very well, did not complain about the leads nor the rejection. Now, most of the other loan officers that were calling were experiencing rejection fatigue in a pretty major way. He had some turnover that he didn't like. So he was trying to solve that problem. And he had one loan officer that never had any of those issues. And when he dove in and started looking at what that loan officer was doing, that loan officer was using something called chatbots, conversational marketing. And what he did is instead of calling all of them, he had email addresses, and the leads they bought, they were authorized to text them. So he put those leads inside of this chatbot and let the chatbot go to work. And what's interesting is while there was a lot of rejection, the chatbot was taking the rejection, not the LOs. And as a result of that LO, that particular LO at least, did not have to deal with rejection fatigue. So as a result, he took the leads that came out of that chatbot. The consumer said they were ready to talk, they wanted to talk, and started dealing with them, and he was having a phenomenal response rate. So does that mean conversational AI, or this book I'm reading, conversational marketing, does that mean that is the way of the future? Well, we definitely know that artificial intelligence is having a bigger and bigger impact on the underwriting area. Why would it not have an impact on the origination side? We're seeing evidence of it. And not just a little, but potentially a huge disruptor. It could be a huge disruptor moving forward. I encourage you to go out and get this book, Conversational Marketing. It's written by the founders of Drift.com. It's the most sophisticated chatbot tool that you can put on your website. And there's some other companies that are out there that are conversational marketing. I encourage you, get a hold of me. I'll just tell you all about it when you want to get a hold of me. For those of you that are not interested in that, just keep doing what you're doing as long as it's working. But when it stops working, you may want to give me a call, and we'll talk about some of the other tools that are out there. So when you look at what could disrupt the market, we are going to see technology playing a bigger part of it, and I believe artificial intelligence is going to be doing that. And they say people still want to talk to people. It's getting so good. One particular artificial sales tool that we are starting to use is so good that another company used it for sales, and it was so successful that the consumers were wanting to come in and meet the employee that was actually a computer programmed with artificial intelligence, did such a successful job of talking to them, they wanted to come and meet him and thank them for the job that they did. So I got to tell you, my suspicion is we're going to see a lot more going on in that area, in the area of artificial intelligence on the front end of the business. We're already seeing it coming in, and we'll shortly be seeing some new products being released in the market, which is going to cause for underwriters to be able to go back to underwrite 10, 12 deals a day, because the artificial intelligence is going to take care of the kind of like the no-brainer loans, or at least the easier to approve loans, and is going to work through many of the exceptions before it lands in the hands of a human being, and we'll work on that. I think the same thing is going to happen on the origination side. We shall see. But what was so fascinating about this first opening session at the MBA was no one knows, says Dr. Mohammed, where the disruption is coming from. So I think you should be continuing listening to this podcast, because we're going to be covering what we're seeing, and it's a good reason to share it with others. So one of the other things that Dr. Mohammed did not talk about, but that we're seeing, is some disruption coming to the real estate, the realtor. There's already a lawsuit pending, and we'll put some references up on it and the show notes today of a lawsuit that's pending up in Chicago where consumers are suing, or there's actually an attorney that's soliciting consumers to sue the real estate community about the 6% commission. Again, I'm not going to get into all of that, but I believe one of the areas that's soon going to be disrupted in a major way is the current model, commission model that's going on in the real estate industry. If, in fact, that happens, what does that mean? I'm not sure anyone's really figured it out. Everyone's just kind of looking at that. But if we see commissions dramatically dropping, who's going to be selling properties? So I was flying into Austin, where I live, into the airport, and I was flying in with a couple from Boston. And they were a young couple. I would say they're millennials, but they're a little bit on the older end of the millennials range, and they are buying their first home. They were buying in Georgetown, up in the north part of Austin. And I was asking, I said, oh, that's exciting. How many trips have you made here? Tell me about your home buying process. And they go, oh, we've never been here before. I go, wait a minute, you just closed on a home and you never saw it? They go, no, we saw it, but we have never been here. I said, you have got to explain. And they said, well, what we did is we own, or that actually he's starting a tech company, and he's moving a tech company. It really doesn't matter. But from Boston down to Austin, and he's leaving some of it up in Boston, but he's moving it to another area. He wanted to move to another area. So he searched all the markets on the line, was looking at different cities, narrowed it down to 3, and then he started drilling into the real estate markets of each one of those 3 markets. And Austin came out as the number 1 city that he thought would be best for his company and where he could grow it and draw the greatest amount of talent. Then he said, I want to start looking at homes there. So what we did is we started looking online. We used Realtor.com, Zillow, Trulia, all of the other online services. They even have a ForSaleByOwner.com website. You can look at homes that are being offered even by consumers on a direct basis, on a ForSaleByOwner basis. So he looked at all these homes, and he started narrowing it down to the area he wanted to live, and then the type of home he wanted to live. And then he thought, I better check out and see what I could qualify for on a mortgage, make sure I'm not trying to buy too much of a home. So he went online, got qualified online without talking to anybody, and knew that he could qualify for this particular home. And then at the end of all that, he finally, because he had to, contacted a realtor that would work with him. And he selected a realtor based on that realtor being the most tech-savvy person that he could work with. He's a technologist. He wanted to work with someone who would handle technology, not struggle with it. They started touring homes doing FaceTime. Again, walking through a home, talking to the realtor in her headset, and he's saying, now, show me the kitchen. Walked in, showed her the kitchen, looked at that, opened the cabinet doors, looked at all the different aspects of the home. And you could just imagine, just the same as you were walking through a home, you have a realtor doing a virtual tour with talking to them, and they're telling you different things about the home, and you're seeing the home. You can imagine you could actually do that. So this individual did that, looked at the home, toured the home, selected the home, and they made an offer, and that's when they contacted the mortgage lender, and they began the process of getting approved. They got approved, they purchased the loan, closed the loan, and they had never been to Austin, Texas. They're so excited to be here. Now, they felt like they had been because of all the virtual touring and all the knowledge that they were able to gather online. So I come back to say this. If, in fact, you could do that, what would keep a buyer from hiring an Uber driver to walk out and walk through a home? You don't even need a realtor. Are there going to be new emerging services where you can go out and hire someone to walk through homes? There is so much potential disruption coming to the real estate industry because when there's that much, a 6% commission being paid, in some cases for what? I'm not degrading the value of realtors, folks. There is a lot of great, hard-working realtors out there, but we all know is in the mortgage industry, there's a fair number of them out there that don't work too hard, and the value they get, their only value is seeming like harassing us mortgage lenders on getting that loan closed faster so they can get their commission. Their borrower doesn't even get considered. So I think there's disruption coming, and this lawsuit that's happening up in Chicago, look at the show notes, you'll see more, you get more details on it, is one of the factors that could be the catalyst to cause for a change in commission structure to realtors. So who will be showing up to do that? We don't know, but these are data points you need to be paying attention to. And that's what Dr. Mohammed was talking about in his presentation. When the experts don't know how to even predict where it's going, what do you do? And in this book, when you talk about Netflix and Blockbuster, and you saw how Blockbuster thought they owned the market share. It was bought by Viacom in 1994, valued at $8.4 billion, and would be bankrupt in 2010. That's crazy. Who ever thought? Well, why? Because technology came in and made streaming of videos a reality. And you don't even think about going to a store and picking out, waiting in line to pick out a video and be online. You just download it. So I think those kind of disruptions are going to be happening inside of the industry, and then it's going to be happening in a bigger way. Okay, so let's talk about some other good examples of disruption. You guys know about Amazon and Borders is a good one. You know, Amazon began selling books in 1995. I think it was in a garage, and they took on the superstores, but they did not get noticed. You know, Borders in particular was generating about $1.6 billion in annual sales, and at the time when Borders was at the peak of the market, they were anticipating, or the concern was, is they're going to disrupt the smaller local bookstores. No one saw Amazon coming, and Amazon came in, and then in 2006, Amazon surpassed Borders in annual revenue, and by 2011, Borders, the former retail giant, was out of business. I keep going back to these disruptors. We talk about, Uber. You could talk about Airbnb. There's so many disruptive examples that many of you have already heard about. If you haven't, go grab your favorite book. Again, I'm recommending the book Conversational Marketing by the founders of Drift. Talked about that a little bit earlier to go back and look at. So check it out. So anyway, after the first general session with Dr. Mohammed, we went downstairs to the Hub, which is in the exhibit hall, and it was a much more smaller group, and we had the chance to ask him questions. It's a Q&A session with him. And there was a lot of questions about where does he have any hint of where the disruption was coming in? He sidestepped those questions, but he says it's probably coming from somewhere outside of where you're looking. And so we're looking at technology, so most likely a technology play, but it's really interesting. The two other sessions that I went to was the general session and update by FHFA. The presenter was none other than the Honorable Mark Calabria, who is the director of FHFA, the Federal Housing Financing Agency. And we were all sitting on the edge of our chairs to see what does the future hold for Fannie Mae and Freddie Mac. And what we learned is there's definitely change coming, but it wasn't sounding quite as dramatic. And I think this has been covered pretty well in a lot of the trade rags within our industry. Now, it's interesting. We all sat in the same presentation, but it was interesting reading how different reporters reported on it. So what I heard is that probably not anything different than what you've been reading out there in the marketplace. Fannie Mae and Freddie Mac are going to exist. I think they're going to be separate for a period of time. There is change coming. I don't think it's in the immediate future. I think we have some other disruption that could come from that, but I would definitely be paying attention. Mark Calabria is a bright guy and clearly sees the need for some change. They do want to get it out from conservatorship. So is it going to go back and be like it was, a stock-traded company who's others going to have interest in it? One thing that Mark Calabria did say is they want to encourage the private markets to come in. They want to see the ABS markets, asset-backed securities markets, come back in and play a bigger role. And I think private capital will be encouraged. I don't think they're going to de-emphasize Fannie Mae and Freddie Mac. And the QM patch that's in the Dodd-Frank rule, when that goes away, I think it's going to open things up. And he seemed to be encouraging that. He seemed to be positive towards that. Now, how does that work when you got Dodd-Frank out there, when we have the CFPB seemingly being pretty aggressive and still being pretty aggressive in certain regulatory rulings? I think there's going to be some coordination, and that's going to get synced up more to have a healthier housing market. But Fannie Mae and Freddie Mac, it's going to be going through some changes. I was encouraged to see that we're going to see some non-QM type product. I think we're going to see the non-QM patch go away, and we'll see some new entrants of new products. We're already seeing that. You look at what CMG is doing. Chris George's company's got a very innovative product. Angel Oak's out there. There's many others. And there's probably more people talking about and more investors there that are introducing new products. Had dinner with Danny, who's responsible for the non-QM, at a breakfast meeting I had with him of Caliber. So Danny of Caliber and I had breakfast along with Anthony Casa talking about something disruptive, Anthony and his disruption of the way loans have done by really stirring up and motivating independent loan originators to go back and be brokers is well underway. We're seeing that. And a lot of people who look at Anthony and his posts out there, I would encourage you this. Pay attention to this guy. He's a reasonable guy, and he's being taken more seriously and given a lot more respect now at these conferences. And I do believe we're going to see the trend right now. It's not disruption, but the trend of we're going to see more independent originators through the broker channel continue to grow. Will it exceed the previous high water mark, which was 56%, is what I think the Housing Wire, our friends at Housing Wire reported? I think it's possible that we could see the third-party movement. And what's driving that is LO compensation. As more and more companies go back to their LOs and say, we can't afford to pay you these higher commissions, they're going to say, okay, we're going to go back out on our own and try to compete that way. And I think we could see that trend continue. In fact, I predict it will exceed the previous high water mark of 56% of all loans being originated will be originated by brokers. Am I encouraging that to happen? By no means. Am I saying that it's a bad thing? By no means. I'm saying it's an observation. It's a factual statement, in my opinion, that we're going to see that happening. Not much was talked about that at the conference, but I believe that's very possible. Now, on Tuesday, May 21st, the general session on government lending was real interesting. Brian Montgomery, who I have so much respect for, what a great guy, who's agreed to come on the podcast and talk to us. We got to get cleared through the appropriate parties there at HUD. But he came on and talked about the need to update the computer systems and looking at the risk tolerances that are within FHA. And I think when you see more private investors or the asset-backed security market coming back in, providing private investors are coming in with more capital, even some non-QM capital, I think it might fix some of the issues. But they're obviously, Brian Montgomery is in charge of making sure he and Dr. Ben Carson are responsible for making sure that the FHA fund stays strong and healthy. Everything indicates that it's going to be as it has been, other than they're going to update the computer system. So no real surprises there. And then we heard John from the Veterans Affairs, U.S. Department of Veterans Affairs. We heard Marion from Jenny Mae come on. We talked about Giselle came on from HUD, and also we had Joaquin come in from the U.S. Department of Agriculture. All of them talked about things that they're doing to facilitate more lending and be not more aggressive, but be more, I'm going to use, this is my words, not theirs, accommodative to the needs of the home buyer out there so we can expand home ownership. Again, I think the general theme, again, these are my words, not anyone else's, is that home ownership in America is the privilege of everyone, not the right of everyone. But how can we make it more affordable? So home affordability, making homes more affordable is a big issue. Affordability, housing affordability was discussed a fair amount. So that's a quick update in some of the things we heard there. As you walk through the exhibit hall, I tell you, it was really not very busy in there. The exhibitors, I talked to my good friend David Allison at Dobermule, and he said, yeah, the exhibit hall is pretty dead, but it was worth it to be there. And he picked up a couple of clients from that. But the exhibit hall, every time I was in there, was not a lot of activity, other than all the activity was around the hub where all the Q&A sessions were, with like the one with Dr. Mohammed. So very good stuff. It was a great conference. Again, I encourage you to attend these conferences, folks. You need to be there and listen to for yourself. Yes, it's great to read the trade regs. Yes, but what I saw, and I know these guys, the reporters that are reporting on what they heard from each one of the presenters, they're listening it through their ears, their filters, what they not want to hear project. They're all very conscientious to report it accurately. But what you hear is there can be varying interpretations, I guess is the best, more gracious way to say it, about what's being said. And I think it's important that you be there as much as you can one-on-one. Great conference. New York's a great city to go. It is expensive. I did find some good hotel deals. Interested in how I find those. Go on Priceline. Go on to different ways. You can get an affordable hotel. By the way, I stayed at a high-tech hotel. It's called a Yotel. I don't know if you ever heard about this, but it's really cool. You check in at a kiosk. When you go up there to the room, you get your key, and they call them cabins, not rooms. It was fascinating. So when I'm focusing on as much as I do on disruption, I didn't know about Yotel. It's just that came in as one of the low prices, never stayed at, so I'll give it a try. I thought it was so interesting. Check in at a kiosk, not talk to a person, get my room number assignment, my cabin number assignment, get my room key out, and then I went up to the fourth floor, which is kind of the general lobby area, and I was blown away with how nice it is. Went up to my room. It was one of the most efficient rooms. It was small, classic New York room, very small, but it was so efficient. And then when I checked out, I went over to this robot thing, and I wanted to check my luggage because I had meetings the rest of the day and didn't have a flight out till that later that afternoon. So I go over to this area, and I punch in my old room number, put in a code, a security code, and this robotic arm it's the same large robotic arms you see making cars, comes over, grabs a bin out of like a large file cabinet, pulls that bin out, puts it in where this open area, the door opens, I put my luggage in there, and I closed the door, and this robotic arm came and put away my luggage. It was kind of interesting to see how that all happened. So check out Yotel, Yotel. If you ever want to stay at something unique, it's an affordable way to stay in New York. Anyway, that's my update on what happened in New York City. As for next week's podcast, we've got a couple of guests we're working on right now. I'm looking forward to continuing the talk, just talking about disruption, what's going on in the marketplace. I encourage you to come back next week. I want to say again a special thank you to our sponsors, Black Knight, Open Mortgage, Finastra, United Bank. Thank you to our newest sponsor, the MBA, Lenders One, Mortgage Collaborative, Velma, Knowledge Coop, and Vidyard. If you want to advertise, get a hold of us. We got more and more people wanting to advertise. We've only got so much spot here, so we're not sure how we're going to do that, but it's nice to know that you are listening. So many people came up to us at the conference saying, I love your podcast, and it's really encouraging to hear just how many people are listeners. I thank you all that take the time to listen. I thank you for the encouragement. Love to hear from you. Let us know topics that you would like to cover. You're welcome to get a hold of me through LinkedIn. That's the way a lot of people get a hold of me. Or you can text me at 512-632-2900. Texting is the future of marketing, folks. So text me. No, I won't start marketing to you, I promise. Anyway, have a great rest of your Memorial Day, and see you back here next week. Thank you.
You've been listening to Lykken on Lending, a weekly mortgage market update with your host David Lykken of Transformational Mortgage Solutions. Join us next week, and thanks for listening.